With thousands of public companies to invest in, not to mention the many ETFs and mutual funds to buy, it's no wonder many investors don't know where to start. With the recent market downturn, especially for growth stocks, many stocks are trading at significantly lower prices than they were 6 months or a year ago. But what are the best stocks to buy in 2023? While I don't have a crystal ball to tell me which stocks offer the best returns, I've gotten as close as I can get. In this video, I will discuss 10 stocks that I think could be a great buy in 2023 for long-term investors looking to grow their money. Before we get to the stocks, let's recognize 3 caveats. Choosing the best stocks to buy today depends largely on your personal financial situation. I like these stocks as long-term investments. I don't know what they'll be doing in the next few weeks or months. If inflation stays high for longer than expected, interest rates continue to rise, or the US falls into recession, it's entirely possible that most or all of them will decline in the near future. While I have tried to provide some variety, the following list is not intended to be a fully diversified portfolio. Instead, these are my most compelling long-term stocks to invest in 2023 and beyond. And if you like this kind of videos, please hit that like button, and if you want to support me, consider subscribing to the channel. Without wasting any more time, let's go through our list of the top 10 stocks I buy now and hold for the long term, from smallest to largest market capitalization. Number 10, Etsy. Before the COVID-19 pandemic, Etsy was growing rapidly by connecting crafters to customers looking for something a little more offbeat than conventional e-commerce. E-commerce has gotten a huge boost during the pandemic. But Etsy is booming, growing more than twice as fast as e-commerce as a whole. It certainly helps that Etsy is the natural choice when people want unique face masks, but their growth in the product category has been impressive and continuing. In the fourth quarter of 2022, the Etsy marketplace saw a 144% increase in sales from comparable pre-pandemic levels. Few e-commerce companies have competed with Amazon and survived. Etsy didn't just survive when Amazon launched its own handmade items platform, but it won. So it could still be the early days of a brilliant long-term growth story. Because of the strength of its platform and brand, Etsy's market opportunity is in the hundreds of billions of dollars, and with some $13 billion in sales on its platform in 2022, it's only beginning to scratch the surface. And with the significant drop in shares during the recent growth stock slump, it could be time for patient, long-term investors to take a closer look. Number 9, Pinterest. Pinterest is an oasis of positivity in an increasingly dark and divisive social media landscape. This is partly due to the essence of Pinterest, which is ideas. People go on Pinterest to focus on things, not other people. Whether it's building your dream deck, baking a kid's birthday cake, or updating your wardrobe, Pinterest gives people visual inspiration for the things they want to do. Pinterest suffered from the market decline in 2022, mainly because its user base contracted a bit as pandemic restrictions were lifted around the world, but the latest results show that growth has resumed. Plus, there's still plenty of potential for long-term user growth. What's most exciting from a long-term investor perspective is that Pinterest has a huge opportunity when it comes to monetizing its users, especially as the company moves away from its traditional ad-centric model and tries to find ways to integrate e-commerce into your platform. The twist makes sense. Pinterest is a place where people go to find things they might want to buy, and it recently hired e-commerce veteran Bill Reddy as its new CEO to help accelerate its pivot. It may take some time for the company to really develop its e-commerce potential, but long-term investors could be greatly rewarded. It's easy to imagine how seamless advertising, lead generation and product placement can be when people are already there for suggestions. The monetization potential is especially huge internationally, which accounts for 80% of its user base, but only a small fraction of its revenue. Number 8, Block. Block, formerly known as Square, has grown from a payment processing hardware company to a massive financial ecosystem for merchants and consumers. On the merchant side, Block has processed some $186 billion in payment volume over the past 4 quarters and also offers a suite of adjacent services for businesses. On the individual side, Block has the Cash App, with 51 million monthly active users, as well as capabilities that include person-to-person money transfers, direct deposits and debit cards, the ability to buy and sell stocks in Bitcoin, and much more. Block also recently acquired the music app Tidal, as well as the Afterpay Buy Now, Pay Later platform, which is starting to show up in the company's results. As your ecosystem evolves, the company will only get stronger. The The long-term trend toward cashless adoption still has a long way to go, and with many potential growth verticals it could pursue, Block earns a spot in my top 10 best stocks to buy now. Number 7. Shopify. Shopify operates a platform designed to enable businesses of all sizes to sell their products online, with a focus on empowering and growing with small businesses through building long-term relationships. Shopify offers a subscription plan starting at $29 per month for businesses, and also offers many related services that help businesses run smoothly, such as logistics and payment processing solutions. Shopify's one-stop shop approach to facilitating e-commerce has made it a powerhouse. It now has more e-commerce sales in its ecosystem than any company other than Amazon. However, Shopify may only be getting started. The platform has generated $5.6 billion in revenue over the past 4 quarters, but that's just a fraction of the estimated $153 billion in market opportunity it has, and growing, as more retailers focus on online sales. E-commerce is still in a relatively early stage, accounting for less than 15% of U.S. retail sales. And Shopify has the second largest share, giving it a powerful ecosystem with network effect advantages over your competitors. With shares down sharply during the recent market downturn due to recession fears and signs of slowing consumer spending, Shopify seems like a clear choice for the best stocks to buy in 2023. Number 6. Realty Income. When it comes to value, growth, and income, it's hard to find a more complete value for long-term investors than Realty Income. If you're not familiar, Realty Income is a real estate investment trust, or REIT, that invests primarily in single-tenant, freestanding commercial properties. Walgreens, ticker WBA, Dollar General, ticker DG, and FedEx, ticker FDX, are just a few examples of major tenants. Realty Income owns more than 11,700 properties in the US and Europe, most of which are fairly recession-proof and less vulnerable to e-commerce disruptions than many other retail companies. In addition, Realty Income's triple net lease structure helps create a stable and predictable revenue stream. The proof is in the results. Since going public on the New York Stock Exchange in 1994, Realty Income has achieved an annualized total return of 14.6%, far outpacing the S&P 500, and has paid more than 600 consecutive monthly dividends. As of March 2023, the yield is approximately 4.6%, and has increased its payout by a staggering 101 consecutive quarters. Number 5. Mercado Libre. One of my favorite long-term stock investments in the market, Mercado Libre is often called the Amazon of Latin America, and for good reason. The company operates an e-commerce marketplace that has a dominant presence in some of the region's most populous countries, including Brazil and Argentina. However, Mercado Libre is much more than that. It operates a fast-growing payment platform called Mercado Pago, a logistics service known as Mercado Envios, a business lending platform, and much more. And don't overlook Mercado Crédito, the company's young but growing lending business. Mercado Crédito has $2.8 billion in outstanding loans and has grown rapidly so far. The best part is that all of these businesses are at a relatively early stage. Mercado Libre's merchandise volume is about 6% of Amazon's, and its Mercado Pago payment volume is less than 10% of what PayPal processes. Therefore, there is a long way to go. Number 4. Intuitive Surgery. Robot-assisted surgery beats shaky human hands. This general thesis hasn't changed much since I first reviewed Intuitive Surgical stock in 2005. The Da Vinci surgical system is the undisputed market leader, and the razors and blades model helps it generate recurring revenue as its systems are used to perform procedures. Intuitive Surgical dominates its industry with approximately 80% market share worldwide and has plenty of room for growth as its surgical systems become more widely adopted and the number of procedures they support increases over time. This is especially true in many international markets, where the introduction of robotic-assisted surgery could be a long-term growth catalyst for this excellent business in the coming decades. Number 3. Disney. The House of Mouse is the all-terrain tire of a portfolio. The pandemic hurt its theme parks and its movie business, but it helped the Disney Plus streaming service, which became a powerhouse years earlier than Disney expected. In fact, Disney Plus now has more than 160 million subscribers less than 4 years after its launch, versus the company's original 5-year target of 60 to 90 million. In 2023, demand for Disney theme parks and movies is stronger than ever, despite inflationary pressures and recession fears. In fact, Disney Parks revenues are well above comparable periods prior to the pandemic, due to initiatives that have led to increased spending per visitor. On the streaming side, Disney Plus has been a huge success, and Disney is now focused on the profitability of Disney Plus and its other streaming platforms, Hulu and ESPN Plus. Disney could be the ultimate combination of a reopening play and a pandemic-fueled growth company. Is poised. And it continues to have tremendous earnings growth potential as new business areas evolve. Number 2, Berkshire Hathaway. While most of this list is made up of growth stocks, or at least stocks with interesting growth drivers, this is the relatively lackluster stock of the bunch. But in the best possible way. Berkshire Hathaway owns a collection of about 60 subsidiaries, including such well-known companies as Geico, Duracell and Dairy Queen, to name a few. Berkshire also owns a common stock portfolio worth over $325 billion that includes huge stakes in Apple, ticker, Apple, Bank of America, ticker BAC, Chevron, ticker, Chevron, American Express, ticker, American Express, and Coca-Cola, ticker, KO, as well as positions in dozens of other companies, many of which were handpicked by legendary investor Warren Buffett, who at age 92 continues to manage most of Berkshire's investments. In fact, if Berkshire were a mutual fund, it would be the largest actively managed mutual fund in the world. Buffett bears will say it has lost its fastball, but Berkshire continues to produce market-beating returns most years despite its massive size. And while Berkshire certainly isn't producing incredibly huge returns, there's no reason to believe it won't continue to outperform the S&P 500 for the foreseeable future. Buffett won't be at the helm forever. But Berkshire is his legacy, and he has protected it for years to ensure its strength long after he is no longer in charge. In a show of faith, he and his partner Charlie Munger have been steadily buying back shares. That's a good sign for patient long-term investors like us. Number 1, Amazon. Amazon doesn't need much of an argument for most people. The company is a dominant leader in the U.S. e-commerce market with nearly $500 billion in gross merchandise sales last year, and its Amazon Web Services cloud platform is also a market leader. However, there's more potential for growth than you might think. We're far from maximizing e-commerce adoption. It still accounts for less than 15% of all U.S. retail sales. The cloud industry is also relatively young and is expected to quadruple in size to a $1.6 trillion market by 2030. Amazon also has great potential in other areas such as healthcare, grocery stores, neighborhood markets, etc. That was the last company on our list. To conclude the video, I would say that investing in stocks can be a difficult undertaking for those who are new to the market. With thousands of publicly traded companies and various products, it's difficult to know where to begin. However, investing in stocks that have the potential to grow over time and provide steady returns as dividends can be beneficial. In this video, we discuss the 10 best stocks to invest in based on the presenter's assessment. It's important to recognize that these stocks may not be appropriate for everyone and market conditions can change, but this list serves as a starting point for investors who want to pursue solid, long-term investments. Be sure to conduct your own investigation and speak to a financial professional before making any investments. If you found the video helpful, be sure to follow the channel and like it so you can see more informative videos about investing.